All right, let's get started. Thank you all so much for joining this evening. This is an exciting webinar that we put together today. My name is Christina Hapanowitz. I have with me Casey Gibb, Bobby Hapanowitz, and we are here to talk about the EISP offer that is currently out to a lot of Verizon associates right now. So let's get started. We perhaps unabashedly call ourselves the Verizon Retirement Advisors. Unofficially, of course, we are not associated or affiliated with Verizon or any company on any official capacity, but we have been working with Verizon associates for over 20 years now and helping them retire from Verizon. And this is not our first EISP offer. We have helped associates navigate EISP offers in the past, and that's what we're doing now, this time around as well. So we're really excited to bring this video to you guys today, this webinar. And at the end of a very brief introduction of the highlights of the EISP, we are going to take your questions. A lot of you guys have already submitted great questions for us. So feel free to add any questions that you might think of now in the Q&A box. It's either going to be at the top or the bottom of your screen. So use that Q&A box, don't use the chat box. The Q&A is easier for us to see and make sure we get to all of your questions. But in the meantime, we have so many questions here submitted from you guys, and we're really looking forward to getting to them. But as promised, let's cover the highlights of the EISP. So the volunteer period began on Monday, October 19th, and it ends November 17th. So typical EISP offer, you have around 30 days to make that decision and get that paperwork submitted. Your last day of work for those whose retirement offers are selected is December 5th. Now, we did put out a video a few days ago where it said December 4th. So that's a little redaction and a correction right there. It's actually December 5th based off of the information that we've just received. There are three components to the EISP, and there usually are three components to the EISP: the voluntary termination bonus, the termination allowance, as well as the expense allowance. Now, this time around, the bonus, $10,000 for each individual, that's paid out in a lump sum, typically within 30 days of your last day of work, of your date of termination from Verizon. That's before taxes. The termination allowance, this time around, $2,200 for each year of credited service, up to and including 30 years. So the maximum benefit that anybody can receive for this component of the EISP is $66,000. That's, of course, again, subject to all applicable taxes. This third component is the expense allowance, $750 per year of service, up to $3,750. Now, this component is to basically reimburse you for any expenses that you might have to incur to relocate or find a new job. Those expenses do need to be approved by Verizon, by your employer, to get that reimbursement. Okay, let's move on to this next slide here. Just a few more highlights for the EISP, specifically regarding the termination allowance. Now, if your termination allowance, again, based off of your net credited years of service, is over $10,000, then you have two options to choose from when it comes to getting this payout. The first option is you can choose for 100% of that termination allowance amount to be paid out in monthly installments. And you can choose, and that will happen for up to 48 months. So at the most 4 years. The second option that you have is to choose half of it to be paid out in a lump sum. And that lump sum is typically paid out within 30 days of your date of termination from Verizon, in this case, December 5th. And then the second half of the termination allowance amount would be paid out again in those monthly installments up to the 48 months. Now, it's not going to be 48 months for everyone. And this actually leads us into one of the really great questions that we had submitted here. And I'm going to read it out loud. And then what we're going to do is look at some examples that help answer this question. So the first question we have here, please explain the two ways the EISP termination allowance can be paid. It seems confusing to me, depending on how many months away I am from my 67th birthday. So let's bring this up here. Bobby, I'm going to turn this over to you. And why don't you talk us through some of these examples? that show the difference between, what one person's payout is going to look like versus another, depending on their birthday, depending how far away they are from age 67.
Good.
Yeah, absolutely. There's a couple of different components that go into that. Christina, you mentioned the age, you mentioned years of service.
Mm-hmm.
As Christina mentioned, this is an enhanced ISP, meaning that you get $2,200 per year of service that you have with Verizon. The standard, the EISP is $1,100. This one's $2,200. And then, so you, again, $2,200 per year of service. So in this example one, John Smith has 24 years of service. That would be, that's $52,800 in termination allowance. That's the second component. The first component is that lump sum, $10,000 payment that you would receive. And so again, since he's 48 months away from age 67, he is able to take that termination allowance in one of two ways. First one being 100% in 48 monthly payments. And in this example, he'd be receiving $1,100 per month.
Right.
And then the second option, of course, is to take the 1/2 lump sum option, or the one, and then with the remaining half, get the $4,800 monthly payment. And of course, in this example, that would be $26,400 in addition to the $10,000 in a lump sum, and then $550 monthly after that.
Mm-hmm.
Couple different options for you. Depends on what you're looking for. But Casey, how about we get into example number 2?
Yeah, I was just going to mention before taxes, all these payments are subject to federal, state, local,
Mm-hmm.
Social Security taxes. So it's considered almost like wage income.
Mm-hmm. Are taxes automatically withheld? Can you choose for them to be automatically withheld, or is that going to be an accounting or planning issue?
It's automatically,
Okay.
yes,
Mm-hmm.
because it's considered like wage income, as I said. So by law, they have to withhold
Okay.
federal, state, local.
Yeah,
Okay.
that's an important component, though. A lot of folks see the headline number, but when you're doing planning for that next step, it's important to keep in mind that a little bit of that is going to taxes. So something to keep in mind as you're planning.
Absolutely. Okay. Now, Bobby mentioned we have another example for you guys. Bobby, Casey, which one of you guys wants to take us through this? The whole purpose of showing a different example is to show how your age affects what your payouts might look like depending on which option you choose. So
We can start with option 1 and I'll finish with option 2. Then.
Absolutely, yes. So again, this option, John Smith is now age 65 with 27 years of service. Again, he can still receive that $10,000 lump sum payment. Now this time it's a little bit different because John Smith only has 2 years till he reaches age 67, meaning that in option 1, instead of 48 monthly payments, he'll receive 24 monthly payments. So that $59,400 termination allowance is divided into 24 equal parts, $2,475 equally. Again, that's a before tax number. Casey, how about
option 2? Option 2, same $10,000 lump sum termination bonus. So you're netting probably after tax somewhere north of $7,000.
Mm-hmm.
Again, it's subject to federal, state, local.
Mm-hmm.
And the $59,400, it's taken out over 4 years, half of it, and the other half in a lump sum.
Mm-hmm.
But the 4-year payment, instead of 4 years, it's actually over 24 months. Because this person is age 65, you can only take payments up until 67.
Mm-hmm.
So they're compressing the same payment, but over fewer months.
Mm-hmm.
Yeah, and the reason they do that, one of the reasons that we find it's beneficial for them to do that is because most folks' Social Security full retirement age is in and around that time. Most people are taking Social Security at that time. So the idea is get those monthly payments to you up until Social Security, and then you have that Social Security benefit in addition to your other Verizon retirement benefits to help you with your monthly income needs.
That's right. Okay, and we have one more example that we put together. Full disclosure, John Smith is not an actual Verizon associate. we put the most generic name that we could think of here. This is purely, based off of an example, not based off of any real person for privacy purposes. But let's talk about this third example. Take us through what it means to actually attain age 67 or later, and what that means for your options for payout.
Right. So again, in this example, our friend John Smith is now 67 years old, 29 years of service. And so regardless, it's only one option at this point. You're going to receive that entire payment in a lump sum. In this case, it's $73,800. We get that by, of course, you get the $10,000 termination bonus. Now, this time you have 29 years of service times $2,200 per year of service. And that comes out to $63,800, totaling that 73,800 mark. Yeah.
And the only other scenario besides attaining age 67 or being older than that, really the only other scenario where the lump sum is your only option for the entirety of the payout from the EISP is if your termination allowance amount is less than $10,000. So less than $10,000, you have to take the lump sum. You don't get those two options. Okay, that was a great question. Thank you for submitting that. Let's get into more questions here. So the first one I have here, how does pension and medical benefit eligibility work? This is a really important question because a lot of the time your pension and medical benefit eligibility has a huge effect on the decision of whether or not to take the offer. So for those of you who are very seriously considering the offer, what we think is safe to assume is that you're most likely fully pension eligible and eligible for medical benefits as well. Wouldn't you say so?
Absolutely. This is a very popular question. We actually just spoke with a gentleman just a few minutes ago regarding this same question, something that's on a lot of folks' minds. So Chris, I think you have a slide you wanted to share.
I do.
Right.
Yeah.
If I can bring it up here. Why don't we answer another question while I bring it up?
Okay.
Sure. Yeah. Another question that we got, actually a good place to start, how to apply for the EISP. So at this point, you decided, okay, the EISP is right for me. How do I apply? Any key tips? And so, of course, you get that employer volunteer form, the employee volunteer form. And you would go through and you would check off which option you want to take. We just went through those two options in all of those examples. It's that simple. And of course, the date that you have to get that in is November 17th, if you want it, if you want to take the EISP offer. Now, say you take the offer and then you decide, okay, maybe it's not for me. I want to continue working for Verizon. I want to continue working. You have the opportunity to take that back before November 17th. But after that date, it's what we call an irrevocable decision. You can't take it back. So with that in mind, we do tell folks to once, speak with an advisor, speak with someone, make sure that you're doing the right thing for you. Number two, if you're faxing that in to the benefit center, if you're faxing that in, make sure you get a copy of the fax receipt. Make sure you also make a copy of the employee volunteer form so that, because, during these times, it's a very busy time for Verizon. They're handling a lot of intake. It's easy for a mistake to be made. So if you cover your bases on your end to make sure that everything is handled the appropriate way, that of course solidifies that the right thing is going to happen for you.
Absolutely.
Right. Yeah. If you're applying, you should get an email confirmation usually from Verizon that the form was received.
Okay.
But that same form is used to accept the offer as well as to revoke it. So definitely keep a copy
How
of
about,
that form.
and one of these other questions here is, when will I find out whether or not my EISP form was accepted? So when would they find out that, yes, they're going to retire and their termination date is going to be December 5th? What's that timeline usually look like?
That's pretty quick. So November 17th is a Tuesday. So I would think by the end of the week they should.
You're going to know.
Yeah.
Right.
They're not going to keep people strung out too long. So.
Absolutely. Okay. So thanks for giving me a little time to bring that up here. And I'm going to bring up this eligibility slide on the screen right now for everybody to see. And I'm going to pull this up. All right. Can you guys see that here?
Yeah. So this chart here, this picture here goes over what it takes to get full pension or full retirement benefit eligibility, to include your healthcare, retiree healthcare benefits as well. So you could see there, the first rule, it's one that we call the 75 rule, meaning that the combination of years of service and age has to at least equal 75. So if you're at a minimum age of 50, you have to have at least 25 years of service. If you're 55, 20 years of service, 60, 15 years of service, and so on. So that's one way to get it. And then, of course, the second way is if you have 30 years of service at any age, doesn't matter how old you are, you do have full pension eligibility. There's no deduction in your pension benefit. You have full retirement benefits eligibility.
Okay.
Now, if you don't have full eligibility for retiree healthcare benefits, those benefits are phased out after 6 months, and you would have to find another option for you. So that's, again, as Christina said, very important topic for a lot of folks when considering whether or not to take this offer.
Yeah, for the folks who are pension eligible, retirement eligible, for the first 6 months, it's active retirement, or not active, but just active medical benefits. Then after 6 months, it's retiree benefits. So after 6 months or before, you want to go online and talk to the benefits center and apply for your retiree benefits.
Okay. All right. So we just got a live question here that was just submitted. So let's take a look at this. Do you have some basic guidelines on how Verizon approves of the relocation allowance? Is there a time period or expiration? That's a great question. Casey, do we have any knowledge on the
Yeah, I think
ins
it's
and outs of that?
1 year from the date of separation. So it's not a long time.
Sure.
I think tuition expenses might be 2 years, before and after the separation. But for relocation allowance, I believe it's a 1 year period.
Okay. Where should associates go to? Who should they call? Who should they ask about the specifics of this stuff? Who do they actually go to get certain expenses, reimbursed or not?
Yeah, I talked to the Verizon Benefits Center.
Okay.
So there's a retirement specialist you'll be assigned to. So that person will be helping you out with your medical benefits, relocation expenses and such.
Okay. Awesome. Thanks, Case. All right. So good stuff here. Let's go to another question that we have here. And it talks about, we just talked about pension eligibility and medical benefits eligibility. There was a great question that was submitted talking about the timing of electing your pension benefit compared to the timing of the EISP offer and submitting the paperwork. Why don't you guys talk us through what that timing should look like for someone who's, going to take the offer?
Well, if you're submitting your EISP offer, that means you plan on retiring, hopefully. So why not, pre-plan and get your pension election forms in hand so you can review them, make the proper election, understand your benefits, your different options. So I would, at this time period, call the benefits center. We do it all the time with folks, and order your pension election and authorization form. They'll give you your benefits, your pension estimates and such, and we can kind of plan for that. And then as soon as you are notified that you were accepted, go ahead and submit the election form to the benefits center.
Okay. And if you guys do end up submitting the pension election form, you do end up submitting the offer, the EISP offer paperwork, and you are selected and you are retiring, you have to check out our video absolutely about what to know in terms of selecting your pension benefit, electing your pension benefit, and commencing that benefit, which you can see on our YouTube channel, by the way, if you search Panowitz and Associates YouTube. Okay, let's go to another question here. Now that I am applying for the EISP offer, should I change my 401k investments? That's a great question. Bobby, you want to take that one?
Sure. That is a great question. And, when you're in that phase of saving for retirement, typically your investments are going to look a little bit different than when you are taking income from your accounts for that retirement. Now, that typically for folks is a gradual glide path to a more conservative retirement-like allocation over time. We do typically see that. Having said that, to answer that question, on an individual basis, should my 401k investments look different? We would have to, look on that on a case-by-case basis because everybody's situation is different. Everybody's 401k allocations look a little bit different. So there's a lot of factors that go into that. But, if you're asking that question, you really are thinking along the right track.
Okay, awesome. Okay, let's see here. How about, Okay, we covered this very briefly in the introduction, but let's go over this again. When should I expect to receive the $10,000 voluntary termination bonus? About how much will I receive after taxes? We covered that a little bit, but that's an important topic. So Casey, do you want to cover that?
Yeah, the bonus is important. It's a lump sum payment, usually made within 30 days or by 30 days after you're off payroll or separate from service. So that should be early January 5th or so, you'd get that lump sum payment.
Okay.
And it's direct deposited right into your bank account as usual through payroll. And as I said before, you're subject to federal, state, local Social Security tax. So, and they probably over withhold on the federal just to make sure you have enough withheld. So you might be receiving somewhere north of 7,000 or so.
Okay.
If they over withhold on the federal, you get it back at tax time.
All right. Good stuff. Okay. How about this question? When the lump sum is elected, how does one take a monthly draw? I know the current interest rates are great for our lump sum amount, but do they negatively impact the monthly draw? So I'm pretty sure this question, the individual who submitted this, I'm pretty sure what they're referring to is the pension lump sum.
Yeah.
Because of, the interest rate, component of this. So do you guys want to speak to this? I think this is just such a fantastic
Do you want
question.
to talk about the rollover option?
Absolutely. So when you do make that rollover, what a lot of folks will do is roll that into what's an IRA, individual retirement account. The reason being is when you make that rollover into that IRA, you're deferring that tax payment on those assets until you actually take the money out. So, most folks will typically try to take a conservative amount of money out. If you invest that money in the right combination of stocks and bonds for you, and take a conservative amount of money, those stocks should give you purchasing power protection over the long run, and make sure that your ability to your income needs stay on par with inflation and other factors. That those bonds will provide some short-term buffer against volatility, also will provide some current income. So the right combination of those will allow you to take a conservative withdrawal rate. And if you do that, it's likely that your investment should be able to last you in perpetuity.
Yeah, no doubt. When you elect the lump sum option for your pension benefit, you are subjecting yourself to certain, let's say, risks or considerations that you don't really need to think about with an annuity option. Interest rates are one, and just as importantly, market volatility. But with the right kind of investment game plan, with the right kind of blueprint, and with a disciplined mindset and the wherewithal to maintain that discipline, what we have found is that the overwhelming majority of Verizon associates who elect the lump sum are much happier with that lump sum option. That is a personal decision. We can't tell you which one to go with. But again, over 99% of associates do go with the lump sum for a few reasons. One, you're not, a lot of the time people don't want to be tied to their former employer in some way. They want that money on their balance sheet and they want to own it outright. And then the other main reason is that payment, yes, that annuity payment is quote unquote guaranteed, but it's not growing at all. And so it's very tough to keep up with that pace of inflation, with that cost of living that's adjusted every year when that payment amount is stagnated. And then of course, not that we are able to, we cannot look into the future or anything like that, but there's always the risk of forfeiture, which basically means that if the company that's sponsoring your pension annuity runs into some sort of financial trouble, then that money could be subject to satisfy creditors, which, a lot of people don't like. So those risks associated with the annuity, for the most part, usually outweigh the risks that are associated with taking that money, putting it on your balance sheet, and taking responsibility of getting it invested. And quite frankly, that's why we have the job, is to help, be good stewards of that money.
And there was an interesting point. They mentioned interest rates.
Yes.
And in that question. And we actually had another question come in before this about interest rates. Pension interest rates have come down what does this mean for my lump sum? And that is a great question. Interest rates are near all-time lows right now, meaning that lump sums work inversely to interest rates, meaning as interest rates go higher, lump sums go lower, and the reverse is true. Like right now, when interest rates go lower, lump sums are higher. And because of this, we're seeing lump sums that are just about as high as they've ever been.
Yeah, I've never seen it. Yeah, you have the GAT rate at 1.3%, the PBGC at 0%. These low rates have just skyrocketed the lump sum cash outs.
It's unbelievable. So when you consider that and you consider the lump sum versus the annuity option, the trade-off, most folks we find are finding that trade-off to be more and more favorable to the lump sum in this day and age, in this interest rate environment.
Absolutely. Great questions. Okay, we have another question up here. If you elect monthly payments for the EISP, does your tax bracket go down when you retire, even though you're getting payments? That's a great question. It's really dependent on, it's going to be different from one person to another. What we can say is that typically taking the monthly installments is, again, typically more tax friendly because you are spreading out those payments rather than receiving a lump sum all in one tax period in one calendar year. But whether or not your tax bracket goes down in that first year of retirement is really going to depend on how much money did you make before you retired versus how much money are you going to make after you retire. And especially in retirement, it's not just salary that you have to worry about anymore. It's investment income, income from your retirement account, which is taxed at ordinary income tax rates versus non-retirement money, which is taxed at capital gains rates and other more favorable rates. So there's a lot of tax planning that does go into retirement planning and cash flow projections. And this is a great question. What I personally would recommend is work with your advisor on figuring out what your tax bracket is going to be. Work with your advisor and your CPA, and they together will be able to help you plan and prepare for any sort of change in what your tax situation is going to look like. Typically, the majority of retirees are in lower tax brackets, though, compared to the tax brackets that they were in when they were working and making, an annual salary. Wouldn't you say so?
Right.
I mean, all the studies that have been done show that. Okay, let's see here. Which termination allowance payment option is better? Monthly payments for up to 4 years, or one half immediately and the other one half for up to 4 years? We kind of answered that.
Yeah,
That's a good question. It's tied in.
Yeah, everybody's a little bit different. Some like to lump sum half just to pay off some debt, some bills, get some cash in hand, but some like to spread it out tax efficiently over 48 months.
Yeah.
Right.
Okay, so here's another question. And this is similar to the examples that we illustrated on the slides earlier, but let's still ask this because this is pretty good. I have 33 years of service and I am 59. How much is my termination allowance? About how much would I receive each month for the next 4 years? Should we pull out our calculators and do some math?
Yeah, you better.
Okay.
Well, actually, it's 30 years, which is the max allowance, times how many years of service?
Well, 30 years of service.
30 years times 22. Yeah,
2,200.
that's 66,000.
Yeah.
66,000.
Okay, there you go.
Yeah,
So
okay.
no calculator needed.
Plus the $10,000 lump sum payment. So combined a $76,000.
Yeah.
Okay.
But just looking at the 66, which is their allowance, divided by 48, that's monthly, that's about $1,370 a month.
Yep, 1375 to be exact.
Oh, yeah.
But
Before tax too.
Before tax.
Before tax.
Now, here's the reason why I wanted to ask this question again, because I want to make sure that we are clear about something. We talked about the number of years to 67, age 67, and how that would affect, how many months, over how many months the termination allowance is paid out. But remember, the max amount, the highest amount of months that you can choose to have that monthly payout is 48 months. So even though, this person is 59, much more than 4 years away from age 67, that max amount is 48 months. And therefore you automatically know that the monthly payment you're going to get is $1,375 a month. So, okay. Actually, we are running up on all of the questions that have been asked, which is great. There's one more question though that I'll ask, and we've covered this throughout all the questions we've already answered, but let's just maybe leave it with this and maybe give another minute or so for anybody to ask any other questions up here. But how do I apply for the EISP? How does that work? And we actually have that picture to show.
Yeah, we do. That's right.
So should we bring that up maybe, and you guys can answer this question?
Oh, sure. Let's bring it up.
Okay, yeah. Let's see here. Let me share this. So this is a screenshot of the paperwork. Hold on, let me zoom in here. Okay, I know it's getting a little blurry, but it's cropped for, to protect this person's privacy.
So
Where do you guys want to start?
Yeah, I think you want to check the boxes, all the boxes. First, if you're accepting it, check accept. Then below that, check which option. Is it the full 48 months or is it the half and half? You want to check one of those two boxes. Again, the revoke box, that's if you have submitted it and at last minute want to revoke it.
Mm-hmm.
So check the box. If you want to accept, check that. Then one of the two boxes, your options for payment.
Mm-hmm. It's a pretty straightforward form. I think maybe where we've seen some questions or trip ups is that rule regarding the age 67. But I think we've illustrated those examples really well to explain that rule.
I think so.
I think one of you may have already mentioned this, but it's really important to keep the copy on your end,
Yeah.
right?
Yeah.
Keep a copy of the fax receipt, just until you get all the confirmations that you need.
Mm-hmm.
Right.
Always good to be safe.
Okay.
Yeah, and you want to sign it, date it. Your supervisor will need to sign it, date it, phone numbers. Is that a fax number there too they want?
Yes.
Yeah, so fax
The
number.
fax number's at the
Right.
bottom.
Right.
Yeah.
Right.
So just make sure you complete it, make a copy of it. You should get confirmation it was received, and
And then
You're
if
good to
it's
go.
selected, they'll get that sort of outreach.
right.
Yep.
And then that's when, the commencement process begins with the rest of your benefits, the 401k, the pension, and it's all good stuff. It's exciting stuff.
Yes, it
It
is.
is exciting.
Okay. Well, we don't have any other, we're running up on time. I'm going to look through this one more time this evening. If we combed through these questions and missed one or two, we will follow up with you individually to answer those questions. But I think we covered mostly everything. Thank you all so much for tuning in today. We really appreciate it. And it's a pleasure to be with you virtually this evening. We're going to be sending out this webinar, this Q&A, as a recording to all of you. Please spread the word. Anybody who may be interested who didn't have a chance to tune in tonight, we hope that they get to see this. It's really important to make sure that all of your bases are covered. There are a lot of specific nuances to the Verizon benefits in particular, especially compared to benefits through other corporations that other people are
Hey,
employees
Chris,
of.
not to interrupt, but we have
Yeah.
one more question.
Oh, perfect. So I think the point that we were trying to make there is use the resources available to you, work with your advisor, make sure that all the ducks are lined up, because when an EISP offer comes in, it adds, another layer of nuance to the retirement process. And it's a really exciting process as well. So let's look at this question here. Can I take my monthly payment in 36 months instead of 48? 36 months will take me to age 59 and a half. That's a great question. Are you able to choose the length, or is it's just automatically preset?
At 4 years, 48 months. Yeah,
Yeah.
it's locked and loaded. It's preset.
Yeah.
Now, there are other things, if you need income between now and age 59 and a half, there are other ways that you can get that income if you have a 401k benefit while avoiding that IRS 10% penalty that applies to early withdrawals. And we'd be more than happy to talk with you more about that. So that's.
Well, and again, that's why work with your advisor,
Mhm.
use the resources available to you, because there may be a workaround or a specific rule that you might not be aware of that helps bridge the gap
Right.
for your income, for your retirement income. And if you don't have an advisor, please do reach out to us. We are here to help. We have so much knowledge specifically regarding the Verizon benefits that we want to share. That's a no strings attached offer. So, you know, we work with a lot of associates who are nowhere near retiring, and we just help them with their planning. And that's at no cost, no charge. So please do reach out to us. We're here to help. And I think that's it for questions. If you do think of any other questions, please do reach out to us. What I'm going to do here is just one more time pull up this screen, which has our emails at the bottom of the screen. It also has our phone number, 412-261-5966. Please do reach out to us. We hope to hear from you, and good luck. And if you are one of the people in this huge group that does get accepted for this offer, congratulations. Very exciting.
Yeah,
and good luck to you. And take care, everybody. Have a great evening.
Thanks, everybody.
Okay, thanks. Good night.